So Japan's stock market is on fire right now. And it's got a lot of us asking the same thing. Is it too late to get in? Today, we're going to cut right through all the hype and the noise to find a clear answer. And we're going to do it using a really powerful framework from our source material. Let's get into it.
Right? It's the question on every investor's mind. For years, the Nikkei was kind of quiet, and now, suddenly, it's all anyone can talk about. But with all the chatter, how do you possibly figure out what the right move is? Honestly, it can feel like a lot. And this is exactly it. You're scrolling through headlines, you see one expert say buy, another says sell. You're looking at charts that are all over the place, and you're just left there thinking, okay, but what does any of this actually mean for me? It is so easy to get lost in that flood of information.
Okay, so to actually cut through all that noise, we need a system, right? A framework. And this is where things get really interesting. We're using a tool from our source called the four-layer analysis. It's designed specifically to give us a clear, big-picture view when everything else just feels like chaos.
So what exactly is this thing? Well, think of it this way. The four-layer analysis takes all those complicated market forces and sorts them into four simple, connected buckets. So instead of chasing every single headline, it helps us see the entire landscape all at once. And here are those four layers. First up, you've got the market itself. Stock prices, investor mood, all that. Second is policy. This is what the government and the central bank are doing. Third, we have trade, which is all about international business. And finally, there's geopolitics, the bigger picture of what's happening between countries. You look at all four together, and you get a really complete diagnosis.
All right, we've got the framework. Now for the fun part. Let's actually plug Japan's market into this thing and see what the data really says.
So after the analysis crunches all the numbers, how each layer is affecting the others, it gives us one simple score. So, what's the final verdict? What is that number telling us right now?
The final score is plus 0.35. Now that might not look like a huge number on its own, but inside this framework, it tells us something very, very specific.
And here's what that number translates to. A score of plus 0.35 means the market is technically neutral, but it's definitely got a positive tilt. The key takeaway here is that it's not a screaming buy, but the underlying conditions, well, they're starting to lean in a pretty favorable direction.
And that's the next logical question, isn't it? If the overall feeling is cautiously optimistic, which one of our four layers is doing all the heavy lifting? Where's this good vibe actually coming from?
And wow, the answer here is really telling. Just look at that top number. The influence from policy straight to the market scores a massive 0.7. That is a huge signal. It tells us that what the government and central bank are doing is the single biggest thing pushing the market right now. And, that makes a ton of sense given Japan's history of central bank intervention. Okay, so that's the picture today. Cautiously positive, and it's all being driven by policy. But we all know things can change in a heartbeat. So what's next? Well, the analysis actually maps out two very different paths from here, the bull case and the bear case. And this lays out those two futures perfectly. On one hand, you have the bull case. If the government keeps up the stimulus and foreign money keeps pouring in, we could see the Nikkei blow past 50,000 yen. But on the other hand, there's the bear case. If those policy promises don't deliver, or if trade tensions flare up, we could easily see the market take a pretty big step back. So with these two very different roads ahead, what are we supposed to do? How do we navigate this? Let's turn all this analysis into a practical playbook that you can actually use.
The analysis points to four key things you absolutely need to have on your radar. First, any new government policy announcements. We already know that's the main driver. Second, keep an eye on corporate earnings reports. Third, any news on trade negotiations, especially with the US. And finally, watch what foreign investors are doing. These are your early warning signals.
So what's the big takeaway here? What's the actual game plan? Well, it's not about going all in right now. The source suggests a much smarter approach. Either you time your investments around big news related to those signals we just talked about, or you wait for the market to dip and use that as your opportunity to buy. So there you have it, a clear framework to cut through the noise, a data-driven score, and a strategic playbook. The goal here wasn't just to tell you if you should buy, but to give you the tools to decide for yourself. Now that you can see the market through these four layers, what's your next move going to be?